Inflation has obviously surprised to the upside over the past year, and further surprises could be in store.
Interest rates have been very low for a long time, allowing a lot of people to refinance and save on their mortgages. Well, today, a big change as the Federal Reserve raised interest rates by 0.75%.
And that is the largest increase by the Reserve since 1994. Elliot Polikoff is live with us now on how this impacts us here in Arizona.
Yeah, Jamie and Jared, this comes as inflation is on the rise and countless Arizonans have been priced out of the housing market, and it's led some to rethink their approach in the short term about what they're doing and trying to make some long-term money moves.
Larger than we were expecting a week ago.
Mike Ward anticipated that the Federal Reserve would raise interest rates. But by raising them 0.75% instead of 0.5%, the True West Credit Union CFO sees many Arizonans in for a rude awakening the next time they check their bank statement.
Depending on what your debt level is, that can be significant. That could be, $200-300 to an individual.
Ward recommends quickly paying off as much debt as possible on variable rate products like credit cards and saving at least 6 months' worth of cash for day-to-day purchases. While Ward says spending less on non-essential expenses can help offset some of the money lost due to higher interest rates, Valley real estate agent Kristen Graziano says that approach doesn't necessarily apply to buying a home in this market.
A lot of times when people are fearful of the market and what's happening, you have less competition. So it's actually a really good time to jump in and buy a house.
On the other hand, when it comes to selling a home, Graziano says a little patience with rising rates can go a long way towards getting the most bang for your buck.
If someone is thinking of selling and they don't need to do it right now, honestly, if it's my property, I would probably wait until the spring.
This sharp rise in interest rates is likely only the latest step in a steady long-term increase by the Federal Reserve. Both Graziano and Ward say it's important for Arizonans to take that into account for future finances.
But today's rate hike, what they could afford yesterday is different than what they can afford tomorrow.
By the end of the year, they could see, upwards of 4% additional interest rate costs associated with their debt.
The rates could change again as early as next month. And between now and the rest of the year, the latest economic projections expect interest rates to roughly double. So those numbers not going down anytime soon.